Hi, this is Randy Finney with the Right Side of the Chart, and this is a late morning session update for Monday, January 7th, 2019. Wanted to just go over the charts. These are a lot of the things I pointed out. I did make a post on right side of the chart earlier today with some charts and levels to watch, but I wanted to go over those levels and cover a few more things. Today is yet another big strong update, and that's why I wanted to get the video out now. Today where markets are rocking again, QQQ is up 0.75%. Small caps are up over 1.3%. SPY is up 0.6%. So another big green day in the markets. And now I suspect we're coming into some resistance levels, and I've seen some bullish developments today that occurred. I'm going to go over that. It really dovetails on what I covered on Friday. However, I think chances are we'll get a reversal here either today, at some point today, this afternoon, or tomorrow is my guess. Basically, what I'm trying to say here is I think the very near term, the risk reward for longs is starting to diminish. Congratulations to those. I've been long most of this move up. Today, I'm closing out. I'm closing out some of that long exposure, my active trading account. Long-term stuff, nothing has changed. Let me just clarify. Right now, at this point, I think the risk reward on the long side is rapidly diminishing. So I think we'll get a pullback here in the next day or two, and a tradable pullback at that, where you can reverse go short if you're an active trader. So very near term, let's just say I'm cautiously bearish. The trend right now is unmistakably bullish, has been since the day after Christmas, the near term trend. Very near term, I'm starting to shift from bullish to bearish as of today, as of right now. Intermediate term, I still remain bullish. Nothing has changed. It's 401k money, longer term stuff, IRAs. I'm still looking for more upside in the coming weeks. Still looking for a big positive month in January, at least into the first. We're already, what are we on the 7th? So we're the first week in. Yeah, and I still think we'll have a nice month in January and possibly beyond. But then longer term, still I remain bearish. So those are the three time frames: short term, intermediate term, and longer term. Looks like that. So on this QQQ daily chart, there aren't any solid resistance levels that stand out. We still have our big 250-day EMAs still well above. I have them tuned down on this chart. You can't see them, but they're 50 is about where the crosshairs are right there, and then the 200 is right about here. That's where they come in, and they're both falling. So right now we do have some resistance here around little over 157, and it's not a super well-defined level. We have a reaction low from November, a couple reaction lows back here, and it looks like late April, and some reactions back here. So it's just a resistance level. It's not a super solid resistance level. We are coming up on these are Fibonacci retracements. So from this point right here, this reaction high back in early December, down to the lows, we are now at the 50% or just below the 50% Fibonacci retracement. Again, that's from this move down. So far, we've retraced about 50% of that move, and that could come in as resistance there as well. And more so, we're just getting pretty overbought. We're in the very near term. Don't get me wrong, we're not overbought on the daily, not even close. We're just coming off oversold levels, and that's why, I still think there's more upside to come in the coming weeks. And if you're not an active trader and you're long, and you were scaling in long like I was in 401ks and long-term stuff leading into that drop until the before Christmas Eve, great. You have a nice average cost basis. You're probably above profitable on those trades. And I do think, despite any near-term pullbacks, as of now at least, I think we'll continue higher. Let's look at SPY real quick. SPY coming up. We have a Fibonacci cluster. There's two. There's two Fibonacci key levels right here at about 256.74. Both the total move off the highs right there. from this high back on September 20th or so, and then from the move down from this roughly triple top, we had these three highs here, and so that is a natural target. So if we continue higher, and I could certainly see that possibility right now, the momentum is bullish right now, but there's two fib levels there. They're overlapping. You can't even make them out. And again, that comes in right about whatever I just told you. Get the crosshairs on there, about almost 257 or so on SPY. Let's see. We also have resistance level coming in here about 254.75, give or take. Again, not super well defined, just something to point out that we have that reaction low from April, and we just undercut it there in February on the February lows, and a couple reactions back there. So again, what this is we've had a very strong run. We have had a little correction here, and that again was healthy. That helped to work off the overbought conditions, the very near-term overbought conditions, and helped us get this thrust up so far. And we could certainly continue higher from here. I'm not screamingly bearish or anything like that right now near term, but I do think the odds are increasing very rapidly that we're going to have a pullback here in the next day or two. Okay, let's look at the futures. This is NQ, the Nasdaq 100 E-minis. Let's zoom in a little bit here. So what's happened since Friday? If you caught Friday's video or any, even actually all the videos last week, I was targeting this level right here. It's a very important level, and it's about 64.0850 or so on NQ, the Nasdaq 100 E-mini futures. We had a lot of reactions on that level, reactions back here, here, and I said, we need to break that out, get the next buy signal, and we did. We broke it out on Friday, and when I did the video, we were up here. We had moved above it, and I told you I expected a pullback to at least come in and back test this level, and that's what happened. So this morning, that was a gift. It was before the market opened, NQ came in and back tested that level, which was obviously an objective long entry. Support once broken becomes, or resistance, I should say, once broken becomes support. So we pulled back and hit that level. Now, what's giving me pause at this point, I had laid out an alternative scenario that we could come back in, break that level, and come as far down here as about to about 62.72, and I still think that's a possibility and a pretty good likelihood. I think that'll happen this week. We have potential divergence on the PPO. Right now, the PPO is starting to curl back up. That could be bullish, and certainly is if we do get a crossover soon. But let me show you a scenario here. So let me try to give it to you this way. The very near term, I don't have strong convictions on where we're going. I believe I said that Friday. I don't see anything bad in the charts. I think if you ask me where we'll be a couple week or two from now, it'll be higher. Near term, I think we're going to have a pullback soon. We have that potential divergence, and if NQ happens to go up, let's just say it goes up here to my next resistance level or target at 65, 53, 75 or so. Would look something like this. We continue on up. I'm drawing the divergence line. This would be the move up, a reversal there. We would then have negative divergence here on the RSI. We'd have double divergence here. We have this big divergence here on the PPO. This PPO would come up and then curl back down, and that would make a nice setup for a tradable pullback. And at that point, I think we may come in and break that 64.08-ish level and continue on down here before we resume. So again, near-term picture, where we go today, it's hard sometimes to call them micro trends. We do have, again, this key support level, and as I always say, support is support until unless broken, so watch that. But I think we'll get a reversal quite likely today before the close. Markets are strong now, and that's why I'm doing this video. I want to get it out there so you can see these things and be able to either tighten stops if you're long. And again, it's been a nice ride up long. If you want to, if you're an active trader, you can try to game a short pullback trade. But again, it's hard for me to say whether we're going to have right now the umph to punch on up here at about that 65.53-ish level before we reverse, or if we'll just have a sudden reversal this afternoon. I won't say out of nowhere. It's sort of pricing into the charts right now that we are going to pull back. So, and I showed you the levels again on the QQQ and SPY. I need to get to those 60-minute charts of those as well. But let me look at ES real quick. So that's NQ. Here's ES, Similar story. You can see we have potential divergence forming here. There's divergence, negative divergence on the PPO, but not on the RSI. We had divergence up to this point right here, and that divergence certainly played out. It played out for that correction. That was your divergent high on both the PPO and the RSI. So what happened now, the RSI has gone on to make another newer high, higher high. So at this point, if ES continues on up, this divergence line could certainly be extended up. I don't have my next resistance target level on ES is about 25.94 right there. Quite a ways up. Can we get there? Well, anything's possible. I just don't think we will. I think we will reverse sooner than later here before we get up there. And it would look something like this. Let me redraw those lines. Just showed you a minute ago on NQ. We'd have something similar here on ES. We'd have these smaller divergences here play out like this, and that could send us back. I think once the correction starts, I think you'll see a lot of longs that want to step in and buy at 25.22. It was an objective level today. That was the first back test. Remember, following the breakout, and I would expect a reaction on the initial back test. That's almost a guarantee. However, the next time around is when I think a lot of longs will step in, and I think we'll just slice on through there and come on down here to about 24.93, and that's where I'd be interested in covering shorts and then going back long again in the active trading account, that is. Another thing to look for is a potential uptrend line right now. You can draw it from here to here. By potential, I mean in my book, you have to have 3 reactions to validate a trend line. This is only 2. Any 2 points can be connected at random. So that's another scenario there, and it would actually mesh well. You could come back in here, hit that my 24.93 pullback target. It would have a reaction there that would help validate that trend line, and then we can watch that trend line later on for a break down the road for maybe a more powerful sell signal. And I wanted to just jump back to the 60-minute charts of SPY. Well, I covered up the daily charts earlier. This is a 60-minute chart. So we have potential divergence here. There's that same potential uptrend line I just showed you on ES. So by potential divergence, what do I mean? Well, right now prices have made a higher high with the PPO making equal highs and the RSI equal highs. However, it's only potential, not confirmed, because these are momentum indicators and they're still heading higher. The RSI and the PPO are pointing higher. As such, maybe they continue higher and the divergences just get burned through. So that's something to watch on SPY. But again, I think we're going to get this afternoon dump today, sell off today, and probably into tomorrow is my guess. And here's QQQ 60-minute chart. Similar story, almost divergence. We have roughly equal highs on the PPO right there. Little bit of a higher high on the RSI, not much. And again, we might have a potential trend line here to watch. So that's what things look like on the 60-minute chart of QQQ. And then finally, I'll show you one other chart that makes me leaning towards a pullback at this point in time. Amazon, Amazon, before it even topped, back here I was highlighting, I had this uptrend line, this rising wedge, tracking it for months leading up to the high. And I said, when this breaks, you'll have a major sell signal on Amazon. And these were my targets laid out months in advance before the stock even topped. And then when you broke down, it was just a beautiful display of technical analysis, in my opinion, just a nice breakdown, back test, offering you a second chance to get short, and it continued all the way down, hit my third and final target. And a lot of members on the site asked, at that point, where were my upside bounce targets? And the first one I had, and it was hit today. It's 16.16. Now Amazon went a little bit above it, but remember, on maybe 8-10 points. 10 points on a $1,600 stock is really insignificant. So that's, you can see the candle. In fact, now we're back below it. So there's a near perfect hit of that target, which is resistance. I still think the stock will continue higher in the coming weeks to maybe months here, but I think there's a pullback coming. And I harp on this one because it is one of the top components of the Nasdaq 100. So it's most likely to, if I'm correct and we'd get a pullback here, you'll probably it'll put some pressure on NQ and QQQ. And then we'll wrap it up here. I just want to jump out to a weekly chart, Amazon. You can see a long-term trend line here. And so you basically have breakdown and a back test of that trend line. So there's another, another view of Amazon. Oh, and by the way, the 40-week EMA, which is the same as a 200-day exponential moving average. This is on a weekly chart. You'd use a 40 period EMA because there's five days in a week. So 5 times 40 equals 200. That gives you your 200-day EMA. So you have Amazon at pretty significant resistance. I showed you 1616 price resistance, plus this uptrend line that it's back testing, plus that 40-week moving average. So that's quite a bit for Amazon there. So usually short trade ideas are reserved for members of the site, but I incorporated this into my general market analysis. I'll make this video public, and I can tell you that I think it's an objective short for a pullback trade on Amazon, or keep it simple. In this market, there's so much volatility in the futures, or even in QQQ or SQQQ, TQQQ. Those are the 3-time leverage that you don't even need to take the risk with an individual stock. Like, for example, Apple the other day, out of the blue, came in. It wasn't an earnings miss. It was just a pre-announcement earnings revision, a guidance. They revised their guidance. They don't report to the end of the quarter, and the stock gap down. What was it, 10% or so? So those are the risks that you carry with individual stocks. So in a fast-moving market, that's why I've had a lot of focus on the index and sector ETFs. You can make now in just days. In just a few days what it would take to make in weeks or even months back in 2016, 2017, or most periods of time over the last couple of years in the market. All right, we're going to wrap it up here. Again, I'll do another update, but I've given you targets and my near term, intermediate term, and longer term expectations for the market. And right now I'm just focusing on the intermediate term and the long term accounts, 401k and stuff. But short term, I think there's an opportunity here for a quick pullback trade on the short side. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.